Hi everyone. All right, so I'm gonna go over these markets, just the ES and crude, to show you what I'm looking for. How is all this? All right, yeah. So just to show you what I'm looking for. All right. So the first thing is today was very slow, but there was a trade. It was bluntly obvious. All right. So I mean, it was so obvious that even the indicator caught it. Right. So what happened is you had this rally on the hourly. Then you have, if you understand, maybe I have to explain this first. So give me a second. All right. So I'm just going to give an overview first and then explain it, because without the overview, it's very difficult to understand what's going on in the market. But basically, market has a structure, and I'll show you what that structure is. All right. The real structure of the market is not higher high, higher low, higher high, higher low, higher high, higher low. We know that's not the case. Why? Because this doesn't take into account any short covering, any inducements, and all of that, any shakeouts, etc. This is an oversimplification. All right. Now, here's the thing: typically when the market's going from one level to another level, a price objective, it will go there in the form of trend. And if you break down those trends, even though they look crazy, right? Because they don't look like higher high, higher low. They look, sometimes they look very chaotic. But what you will see is in an uptrend, the up waves are generally bigger than the down waves. And let's say you would remove all of the pullbacks, you will see rallies, like, not like that, but like, you will see a series of impulses. In any trend, if in an uptrend you have these series of impulses, meaning bang, 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 bang. Now, after those rallies, right, everything else is, I don't want to say random, but it's very confusing. So you might have like this would be the easy one. But you might have like this, then you have that, then you have that, then you have that, you have that, then you have this, that. So all of this is what confuses everyone. And this is designed because if you really look at trends, right, they can be oversimplified, not with the higher high, higher low, but with looking at the size of the up waves and focusing only on the rallies or the impulses. Because in an uptrend, let's say you have, the market goes from, I don't know, like 100 to 200. The key is the big impulse waves. You will see that these impulse waves can more clearly identify a trend. If you just take away everything else, you'll see that these are the key to visualizing it correctly. It's actually the impulse waves. Why? Because of one fundamental fact, which is in an uptrend, up waves will be bigger than down waves, and the impulses will be on the up side. The big waves are always in the up, in the side of the true trend. All right, so explain this. All right, now typically what happens is you have this, and then you have a lot of crap. You have the rally has breakouts in it. So let's just call, so in here you'll have a breakout bar. But when the pullbacks are occurring, you will also have breakdown bars. But these breakdown bars, don't be fooled by them, because they're actually shakeouts. And you just go higher. So I mean, you just have to understand this type of language of the market's trend. Anyway, I'm not going to go into any more of this because I'll get bogged down and forget what I'm trying to do here. So let's just go over here and see what's going on. All right, so this was the hourly trend. First of all, what you want to do is just take a look at the daily. All right, what you see is here are the impulses, the rallies. All right, here are the impulses, which are the rallies. Everything else, like this little shit over here, this is nothing. This is inducement. This right here, you have to be careful with because it didn't pull back enough. So there's very high likelihood that if it that this entire area can be sprung. But anyway, that's another topic. I don't want to get into that. The point is the rallies, the rallies, the rallies, the rallies. Right? So we see that, you know, sometimes I'm two signals on top of each other, but this is a rally right here. This is a rally, hit the pullback. The pullback typically, you know, sometimes it has a lower low spring. Sometimes it has a higher low. The key is not to be fooled by any breakdowns that do not take out the low of the low before the rally high. As long as this is the support, the low before the rally high. So you might have breakdowns here, but those are all fake breakouts. So we see that you have the trend is rally, rally, rally. The impulses on the upside and the corrective waves are on the downside, which is what an uptrend is. All right, now, so we take a look at the hourly and its relationship to the daily trend. And we see that the correction here is done. We have this rally, which had that pullback. And you have to know where to buy the pullback and how to buy the pullback. And I've gone over that in prior videos. All right, the next rally here, for this breakout, very strong. Y is the biggest bar in 100 bars. Has follow through, creates a rally, tap, 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 boom. Has a pullback to test. Now it might look like a breakdown because it's taking out lows. But remember this, a breakdown or breakout ain't shit if it doesn't have follow through. It is totally suspect. So over here we see it does not have follow through and actually goes into a spring position. Spring position, I'll explain that later. But anyway, the point is it has no follow through. All right. So then it breaks out here, but again this has no follow through. So they're holding it. So hold. This right here goes into a slight spring position. Why am I looking for this? Because in rallies, typically the springs have big moves. When there's a spring, it has big moves. Now I can't catch all the rally indications correctly or springs or upthrusts, but you know, sometimes you have to use it with judgment because the market is very, you know, the volatility expands and contracts, so it's a little challenging. I know that the pressure is to the upside. Even if I get like this big bar here, I know it's to the upside. Why? Because this low is holding. This low is holding. So everything else is what I call shit in the middle because it's just bullshit in the middle and you're just looking for a pullback to buy. No matter what indication you get in here, this is an uptrend with a ease of movement of the biggest bar in 100 bars, making a rally. So everything in the middle is designed to confuse you. It's designed to make you think, oh, the market's going down. It's not. Why? Because the low, support low is holding. And that's it. All right, so this was a spring, really deep spring with a little shakeout that looked like a breakdown. And then a breakout above here, but it had no follow through. So it pulled back one, pulled back twice, went to spring position, and that initiated a slight impulse to test the high. This high is a little suspect because I marked it, and you can see here, this is 20 times 10,000, so it's about 200,000 contracts here. It's not easy to get above. All right, so there might be a reaction as the market tests this area here. There might be like a pullback back down to this 49.68 level. All right, so we want to see how it reacts here. and if it breaks out above or it just holds and rejects and does all of that. The other thing to note is all of this is juice. All right, you see all of this? This is all that buying. I don't know what it is, but could be accumulation across here. There's a lot of volume building up across in this range. That is building a base. You see? So your rally, base, which we all know is reaccumulation, then rallies up, pulls back, setting up that base. And I think it's setting up that base to explode to the upside. However, at the same time, we have to look at the daily and see that, it could reject and break the low and spring it. So this, how would you know? It's all about how the reaction is here. Okay? How the reaction is here will tell you a lot. If it busts through, then we have pullback to this area at 49.68. That looks really good. So it would be meaning that this is accumulation support. All right. I think that's all I have. Okay, so the last opportunity, you have an uptrend, you have a rally, pullback, and this spring right here, right? From this spring, look what happened. Buying wave. Biggest buying wave in 39 waves. Did a full test, and then look what happened. Bingo. So someone bought the spring. Bought the spring, tested the spring, some reaccumulation of some structure here, right? And a break and continues higher. So we'll see what the next trade is going to be. Right now, what I'm looking at, I'm looking at the reaction up here. All right, because on this is resistance, but you see this, the sellers are not, they dumped something here, because look at this. It's the biggest in 60 red bars. The volume is that high. So they dumped something here that was pretty heavy. Now, maybe they reaccumulated to go higher. I don't know, but this was a dump. And it went to support where it looked like it was reaccumulated and ready for a reattempt at the high. So we'll see, how this attempt goes tomorrow. Okay. Anything else? Nah, nothing. Oh yeah, crude. Hold on. All right. So in crude, you have the rally that initiated the downtrend. Right. So you have this down rally here. How I know this is a good rally, right? How I know is because it's breaking the low here with ease of movement. Biggest bar in 100 bars. Busts through, gave the upthrust here. Boom, another rally, has ease of movement. This upthrust, I wasn't too sure because, I don't know what time it was, but the other thing is it needs to be higher. I don't like it over here because you can have an upthrust and then get re-upthrusted and don't want to deal with that. So anyway, you had one upthrust, two upthrusts. This was the third one, but I was not interested in taking it. Why? Because this has the biggest wave in 10 waves. So there's something wrong. And it was at a key daily level. Look at this level. See? So the level and the size of this upthrust was highly suspect. And that's why it looked like an upthrust because it's upthrusting these highs, but it's actually breaking out. And then you had this spring, and now you have another breakout. It's going into these upthrust positions, but I'm not too sure, so we'll see how this behaves. Yeah, it's going into these upthrust positions, but I wouldn't I wouldn't count this as an upthrust anymore. Why? Because of this breakout here. I count this as a spring. I count this as a test of spring. But this upthrust is probing these highs. And we'll see how this pullback holds and whether it goes. But this is the key level to take out. Why? This is the high before the rally low. The last point where all the pressure came from, right here. So that's why it's not easy to take this out. You see, like it goes here, it rejects, it tests the breakdown, it has a problem, has to spring, goes back up here, fighting it out here. See all the fighting? So we have to see if they'll take this out and eventually take this out. If they take that out, there's a problem for the shorts, because the major short, they have their stop here. And I don't mean major, but shorts of any significant size, they have their stops right here. Why? Look at the damage that was done from this area, right? So we have to see how this acts. At the same time, if it busts through the pullbacks, look at this. Look at these structures. They're building lines of support. They're building lines. So here you have high volume. This was the accumulation. Spring, this was climactic. Buyer stepped in and did this rally. Now it's going sideways, consolidating. Looks like they're going to attempt to break this area. And if they do, you have a pullback trade right into this area to see if they're going to buy it for another rally up. All right, that's all I got. Thank you very much. Have a good day. Bye.